Welcome back to Smart Stock Sam, where we cut through the noise and get to what actually matters. Today, we are diving deep into Rezolve AI, ticker RZLV. Is it still worth buying right now? Is the recent dip a gift or a warning? And where is this stock realistically headed next week? We are going to cover the institutional moves that most people are completely missing, the short seller aggression that triggered the breakdown, a jaw-dropping fundamental catalyst that changes the entire story, and the exact price targets you need to have on your radar. Stay locked in because this one gets interesting fast. Now, here is what you need to understand about where we are. Going into the week of February 17th, we had identified a critical buy zone between $2.19 and $2.30. This was not a guess. This was a triple bottom support area, a floor built on real technical structure designed to hold. And for most of the week, it held beautifully. On Tuesday, the stock opened right at $2.30. By Wednesday, it pushed to a weekly high of $2.33. At that point, the accumulation thesis was winning. The bulls were in control, and then Friday the 20th happened. RZLV did not just dip, it closed at $2.15, punching straight through our $2.19 stop loss with no hesitation. That is a clear technical invalidation of the immediate triple bottom thesis, and if you had that stop in place, you did exactly the right thing. But here's the question that should be burning in your mind right now. Was this a failing business, or was this something far more calculated and artificial? When you dig into the actual data from that week, the culprit becomes undeniable. Extraordinary short-selling aggression. On February 19th alone, the off-exchange short volume ratio spiked to 46.04%. Think about what that means. Nearly half of all off-exchange volume was people actively betting against this stock in a single session. That kind of coordinated selling creates a massive supply imbalance that overwhelms buyers almost instantly, triggers cascading stop losses across the board, and produces exactly the kind of technical sell signal we are seeing on the charts right now. But here is the thing about extreme short pressure. It does not just destroy a stock. Sometimes it coils it like a spring. And what happens when that spring releases all at once? That is exactly where the institutional flow story gets fascinating. While retail traders were getting flushed out, the heavyweights were quietly moving in the other direction. Goldman Sachs, one of the most sophisticated financial institutions on the planet, increased their position in Rezolve AI by a staggering 340%. 340%. State Street Corp and Geode Capital are holding millions of shares. So why the price drop if the smart money is accumulating? The answer is Citadel Advisors, who reduced their stake by 90%, creating a temporary liquidity vacuum in the market. What you are witnessing right now is a genuine institutional tug-of-war. The world's largest investment banks are building positions, while a few massive hedge funds exit for their own short-term reasons. This is exactly the kind of speculative setup where long-term bulls eventually take control. The question is just whether you are positioned when that shift happens. Now, the institutional giants are not piling into Rezolve AI on blind faith. They are moving because of a fundamental catalyst that just completely transformed this company's story. Rezolve just closed a $230 million acquisition of Reward Loyalty UK. This is not a press release. This is not vaporware. This is real infrastructure, real revenue, real access. The deal is expected to add $90 million in annual revenue and immediately plugs Rezolve into a network of 100 million cardholders through established banking giants like Barclays and HSBC. We are no longer talking about a high-concept AI startup with a dream. We are talking about a company that has embedded its artificial intelligence directly into the payment infrastructure of global banks. That is not just a product, that is ownership of the entire agentic commerce ecosystem. And can you even imagine what happens to this stock price when the broader market fully prices in what that actually means? Here is another thing most people are sleeping on entirely. One of the biggest risks with any small-cap AI name is cash burn, the endless cycle of dilution just to stay alive. But Rezolve has already cleared that minefield. They reached operational profitability in December 2025, and they are on track for full-year profitability in 2026. That is the holy grail for investors in this space. It means the company does not need to keep selling shares to keep the lights on. The financial trajectory is now self-sustaining. So ask yourself, how many other small-cap AI stocks can say that right now? And Wall Street has noticed. The brokerage consensus on RZLV sits at a moderate buy with an average price target of $11. Alliance Global is looking at $13. Maxim Group has a target of $15. From the current price around $2.15, that represents over 400% upside potential. 400%. These analysts are not looking at this week's technical chart. They are looking at the fundamental transformation this company just completed with the Reward Loyalty acquisition, and they are pricing in what this business looks like 12 to 18 months from now. There was one more overhang on this stock that was suppressing the price: governance concerns around CEO Dan Wagner. In finance, ethical red flags can kill momentum faster than a bad earnings report. But here is the update the market has not fully digested yet. Wagner has divested his personal stake to directly address those concerns. The issue has been resolved, but the market is still pricing in the governance discount, as if nothing has changed. That is a lag, and lags in pricing create opportunity. Now, let us talk about the technical setup that could ignite everything. Yes, the charts are flashing a strong sell right now. Yes, we are trading below major moving averages. But in this specific case, oversold is an understatement. Short interest stands at 12.25% of the float. That is over 32 million shares actively bet against this company. The days to cover ratio is 1.92, meaning liquidity is tightening. What happens if a strong earnings report drops? What happens if a new major bank partnership gets announced out of nowhere? Every single one of those short sellers has to buy shares to close their position, all at once, and the stock does not give them a gentle exit. That is the coiled spring effect, and the pressure is building by the day. The options market is already anticipating a major move. Looking at the February 27th option chain, there are 3,054 contracts of open interest sitting at the $3.50 call strike. That is a massive gamma magnet. If RZLV can push above $2.60, market makers are forced to hedge by buying shares, which mechanically accelerates the rally straight toward that $3.50 level. On the downside, significant put hedging sites near $2.50, which explains the current choppiness and volatility. The setup is live. So what is the actual trade plan heading into next week? The new strategic entry zone to watch is between $2.09 and $2.12. This aligns with the recent weekly low and a key Fibonacci pivot point. We are looking for either a double bottom formation or a successful retest of this new floor as support. However, you need a validation break above $2.30 before you can confidently say the downtrend is reversing. That is your confirmation signal. Do not chase before you see it. On the downside, your critical support levels are $2.06 and the absolute floor at $2.02. If the stock closes below $2.02, the bullish thesis is invalidated and we could see a slide toward the 52-week low of $1.07. That is your line in the sand, no exceptions. On the upside, your initial targets are the 220 moving average and the 228 50-day moving average. Clear those two levels and the path to the 350 gamma magnet opens wide. Before we wrap up, I need to remind you of something important. Nothing you hear on this channel is financial advice. Smart Stock Sam is for educational and informational purposes only. I am not a licensed financial advisor. Every stock carries real risk, and small cap stocks like RZLV carry even more. You could lose money. Always do your own due diligence. Consult a qualified financial professional before making any investment decisions, and never invest more than you can afford to lose. The analysis I share is based on publicly available data and my own interpretation. It is not a guarantee of any outcome. So here is the final verdict on Rezolve AI. This is a speculative buy, And I want to be clear about what speculative means. It means the upside is extraordinary if the thesis plays out, and the risk is real if it does not. The fundamentals are arguably the strongest they have ever been. $90 million in new annual revenue, a path to full-year profitability, and real embedded infrastructure inside global banking networks. The institutional flow shows Goldman Sachs and other giants accumulating, while short sellers pile in at levels that historically precede violent reversals. The governance overhang has been cleared but is not yet priced in. And the technical setup, while currently weak, is building the exact conditions for a coiled spring release. Watch 202 like your money depends on it, because it does. If that floor holds, we could be at the very beginning of a 400% recovery. The spring is coiled. The question is not if it releases, it is whether you are ready when it does. If this breakdown helped you see RZLV in a completely different way, drop your price target for next week in the comments. I want to see where you think this goes. If you found this valuable, smash that like button, because it genuinely helps this channel reach more people who need this kind of analysis. And if you are not subscribed to Smart Stock Sam yet, hit that subscribe button and the bell so you never miss a setup like this one. I will see you in the next video.